Hey guys, this is a market update. Are we going to have a pullback? A lot of people are asking this right now after such a big move. Should I buy now? Should I wait for a pullback? I'm going to look at some data in this video, including the longer term cycle, halving cycles, and then this, which is potential drawdowns that you get in bull markets, both for Bitcoin and Ethereum. So we do get these drawdowns, they do occur. And so obviously during bull markets, these are amazing buying opportunities. You know, do you wait for those or do you actually just keep dollar cost averaging? Let's have a look at that. So I want to start with the shorter term price action for Bitcoin. So during this phase that we've had, right, this kind of accumulation or recovery phase, there's been these big expansions in price. Each of the previous expansions has been met with a sell-off and a consolidation where sellers have come in and the price has moved back, right? So expansion and then a sell-off. You get expansion and then a sell-off. You have that here as well. It's not happened this time. Things are different. You can see this breakout of the bear market zone. And then we've just had the price action here, which has just been grinding higher. You can see that right here. So this is fundamentally positive for Bitcoin's price. This shows us that there are just fundamentally buyers coming into the market and taking positions. I think people were shocked into taking action with this breakout. And now people are saying, oh, wow, okay, we need our allocation, right? Because the ETF is pretty much a done deal, right? The media is getting us ready for that to be accepted, it seems. More interviews saying, yep, we think it's coming, you know, it's just a matter of time. So the media is doing its job preparing the market for what the SEC is probably going to do. And so market participants are saying, well, I need to actually get my allocation. I've been a bit slow and sluggish, and so I need to get in here. Now, market flows can, you know, bring us 20 or 30% either way. But the next phase for BTC, where is that? So look, this 40K level is just major resistance. I don't think we're going to get anywhere near that until the ETF is actually approved, or at least the few weeks before when people are very certain of it, maybe you get more speculation. Until then, I think we're in a holding pattern between this, right? So this resistance right here, and then any sell-offs may come to the downside here. But you can see buyers are just flooding into the market right now, and that may not stop because of the Bitcoin cycle right here, which we're going to look at. So firstly, if you are a trader, make sure to trade on Bybit. You can get a $30,000 deposit bonus via the link down below. Just check the details via that link if it's available for you. But if you are a trader, you can get a big deposit bonus via that link if you trade on Bybit. So what we're going to look at is Bitcoin cycle right here. You can see we are still in the recovery phase. The expansion phase usually comes after the halving. So for me personally, 35K is still fine to, you know, I'm dollar cost averaging, I'm being consistent here. I've been being consistent this whole time, right? And I'll be consistent until we break through here, and then I have some decisions to make about whether you want to keep allocating or whether you just want to wait and see what the blow off top will be or wherever the, you know, the peak is, right? It's not just based on price, it's based on time as well. Usually the Bitcoin cycle peaks around this period right here, so we don't know where that's going to be, right? But things are going very well right now, but still relatively cheap in my opinion based on previous cycles. You can also see this as well, right? So I think time is running out, okay? Time is running out for this cycle. Each and every cycle has followed exactly the same pattern. Now this is the Bitcoin cycle and the macro cycle. It all ties in together, but we have during this period, 800 to 1100 days after the halving, you get this blow off top, the drawdown here. This is the accumulation time. So if you're confident in Bitcoin or the other crypto assets that you're confident in, that drawdown cycle is the time to allocate. When everyone's calling for like 7K Bitcoin and everyone's saying it's going down forever, that is the time to allocate capital. Even now, time is running out, right? Between here and the halving, there is still time to allocate, but we can see in previous cycles, this is what people do, right? They get ready for the halving, they start allocating. And so if you're coming in after the halving, you really are just at the wrong time, you know, coming in. That's when you're looking to actually maybe start to pull back a little bit, wait for that price appreciation if you're looking to sell the top, or if you're just looking to dollar cost average at good prices throughout the cycle. You know, these are the worst times to invest. The best time to invest has been and gone. There's that 15K right here. That is behind us now. So you have to make a decision whether you actually believe in Bitcoin and want to actually allocate to it as part of your portfolio, or even for a short-term trade, the next 12 months. If we go by each previous halving, the time to allocate is running out, and you have to allocate and then wait until 300 days, 500 days after the halving, which is when you get a sort of top. Now in the previous halving, this cycle, it was actually 250 days when we got the top after the halving. So that's not very long. So yeah, time is running out, which is why people are starting to allocate, just like every previous cycle. So are we going to get drawdowns? Yes, but they are opportunities. So I've got data on Bitcoin and Ethereum here. 20 to 30% is totally normal for a Bitcoin bull market. So in the 2016-17 cycle, you can see here, drawdowns were actually around 30%, but there were many of them, as you can see. So you don't have to chase the breakouts. If you're trading shorter term, you don't have to chase the breakouts. You can be confident that these will come, right? And in this bear market or the bull market here, obviously we've got the pandemic as well, which is a little bit of an outlier. That 60% drawdown was the worry, and that's when the Fed stepped in, right? So as you can see, drawdowns happen, but the general trend is upwards. So if you're looking to trade shorter term, what you want to be looking for is any pullbacks that occur. If you're looking shorter term, it doesn't really matter what price you get in at. If you're trading over like a month or 6 weeks or 8 weeks or something, it doesn't matter what nominal price you get in at. You just want to be in during a drawdown to then obviously take advantage of the next expansion phase. Now, as we can see for Ethereum, we've got a couple of dips in this cycle, a 44% drawdown, a 30% drawdown, a little bit lower than previous cycles. So maybe ETH is maturing a little bit as well, and people are starting to buy that on dips as well. So dips do occur, and they are opportunities at this stage. In the bear market, you kind of don't buy dips because a dip happens, you get a small recovery, and then it goes down again. Whereas I just think we are in a bull market now. Very volatile, still got a lot of stuff to get through in the economy, but the market is different because the next phase, when we get bad economic data and when things get worse, we know the next stage is for central banks to be easy. During the bear market, when things are way too overheated, we know the next stage for central banks is to get tighter. So that's why I think it's a bull market, because the Fed has stopped raising interest rates. And so the next phase is for easier monetary policy. They're going to hold it here. Economy gets worse, unemployment rises, everyone gets scared. But the next phase for the central bank is to be easier. And so that's why I think it's a bull market, and you buy dips and you take those opportunities. Now that's trading short term if you want to be more active like that. For me personally, I think just getting into this secular growth trend is a lot easier as a trade, right? So just allocating to the growth. These are the adoption curves of many technologies. This is from Jurian Timmer at Fidelity. Mobile phones, internet users, TVs, right, radios. You can see the adoption here is massive adoption, and then the adoption slows. We're nowhere near that yet. We are at under 1% adoption in terms of Bitcoin and ETH here. During the last year or so, you've seen, or the couple of years, you've seen a slowdown in this growth, which makes sense because these are financial assets and central banks have been crushing financial activity. So they have slowed down, but the inevitability of this growth again, I think is important. Even if we go from under 1% to 1 or 2%, it's a massive secular growth in these assets, right? So I think there's a long way to go here. Even if they don't get to 100% usage, they are coming into the mainstream, and that's really the easy, simple trade that I want to make, right? Rather than having to try and trade short-term cycles. So this is what I'm trying to allocate to. Now, in terms of Bitcoin and where you should invest, we've seen the Bitcoin cycle, that low has passed. This is the Sharpe ratio of Bitcoin versus gold. So down here is the best time to invest again. All on-chain data shows this. MVRV, all of the other data shows that when you get that contraction phase in Bitcoin, that's when to invest, given you assume that this general adoption continues. Because the general adoption pushes prices higher, and the best time to invest is the cheapest price. And so at the bottom of the price cycle, here is when you invest. Here is when you sell if you want to take profits, or you just invest a bit less. Here is, coming out of that oversold territory. Now, during this time, you can see each of these cycles before, Bitcoin just completely outperforms gold. And so we aren't there yet, but time is running out, right? We can see the cycle playing out. It's volatile, but time is running out. And that's why people are allocating, because they want to be a part of this again. Now, you can see the returns of Bitcoin are coming down over time, for sure, but there's still plenty of juice left in this trade. The best returns from this cycle are behind us, in my opinion. That's the 15K there after FTX blew up. We're still towards the bottom end of the price cycle though, so for me, still allocating. If you are a trader, check out the deposit bonus from Bybit down below. Also, I'll be updating the crypto investor course towards the end of this year with latest research and what's happening there. That's free for crypto course members. You can check the link to that down in the description as well. I'm James, this is EG. Cheers for watching, and I'll see you in the next one.